The significant drop in Nigeria's oil production level raises serious questions over the effectiveness of the government's effort at tackling oil theft and sabotage of crude infrastructure. In the last 1 year, the government has stepped up its fight against oil theft. A series of arrests have been made as authorities impounded at least 2 massive vessels with stolen crude, which it set ablaze. But losing almost 4 million barrels of oil in just a period of less than 2 months indicates the problem is much deeply rooted.
This problem has assumed its dimension, and it has become an industry of its own. And let me tell you this. There was one OML that one of the oil companies had to abandon because the menace of oil theft was so much that the company was losing a lot of money. The government will just have to take a new approach to solving the problem of oil theft.
And beyond oil theft, experts say other growing challenges are combining to cause a drop in Nigeria's oil production.
There is generally a non-availability of finance and investment, especially for marginal assets in places like Nigeria. You have a lot more competitive jurisdictions that offer more fiscal attraction, where there is more, or let's put this way, less hostility in the host community areas. The other factor relevant to investment is that we're moving away from fossil fuels towards renewable energy. And as this displacement occurs, so the appetite weakens for investment. So all of these issues together really has culminated in a lack of effective production to meet our OPEC quota.
Authorities say Nigeria has the capacity to produce 2 million barrels of oil per day, but the country is producing even less than its OPEC oil production quota of around 1.74 million barrels per day. Amid the decline in output, the economy is feeling the impact, as oil accounts for the bulk of the country's forex earnings.
Now, if we are producing 2 million barrels per day, and the revenue is coming to government coffers in terms of foreign exchange, you can imagine how that will be available to stabilize the foreign exchange situation and the naira.
It will continue to be felt in the economy quite deeply. It will mean that there is less money available for capital projects, less money available to fund recurrent expenditure, less money available for paying of civil servants' salaries, the contemplation of raising the minimum wage. All of these factors will play into the reality of the decline in our production.
The government is still optimistic its security strategy will eventually turn things around and ramp up production. It says it is now making the country's oil and gas industry attractive to investors. But the latest data from the Nigerian Upstream Petroleum Regulatory Commission is a pointer to the work needed to drive its oil production levels. DG Badimosi, CGTN, Lagos, Nigeria.